Here at the Market Lens, we talk a lot about investing. But what does a good investment opportunity look like? The opportunity of a lifetime or a distressed asset? And how do you tell which is good and which is not? Well, that's what we're here to find out. With me today is Olalikon Ikbele. He's an investment banking professional with nearly a decade of experience specializing in market research, capital raising, project finance, and financial advisory across diverse sectors and African markets. He offers deep expertise in structuring project finance transactions, navigating debt and equity capital markets, and analyzing regulatory landscapes, all in support of industrial and infrastructure developments across emerging frontier and economies. Today, he will talk to us about investing, how to spot investment opportunities, and how to take advantage of them here on the Market Lens. Before we begin, let's define what you do for people who don't know what an investment banker is. Please tell us what you do.
Thank you very much. I mean, the investment banking space is quite large, very broad. But what I'll say is there are always two sides to this, right? So you are looking for the deficit side and also you have the surplus side. Now, some people need money to carry on their projects. So you have a big project or uh, projects you want to do essentially, and then you're looking for money. So you have the deficit side in this case, and then you have the surplus side. So these are people who have money that they need to invest, right? So what an investment banker does basically is to be the bridge between the deficit side and the surplus side. So you find yourself connecting capital to need. And I have this saying that, money goes where money sees value. So the primary work of an investment banker is to prime a project for investment opportunities. So long as your project is bankable, your project is has value to offer, an investment banker is well positioned to link, an investor to you. So basically that's the long and short of an investment banker, making projects prime to attract enough investment.
Okay,
Yeah.
so making projects prime. So, um, from what I understand, you help capital and projects come together.
Absolutely.
Projects can also be investments.
Absolutely.
So
Absolutely.
these projects are usually investment opportunities,
Exactly.
right? So I
Exactly.
really wanted to just clear that up
Yeah.
for our viewers, so they know that okay, this is someone who has a lot of experience in
Absolutely.
spotting good investment
Investment.
opportunities.
Absolutely.
All right. So off the top, what do you think for the average Nigerian?
Mm-hmm.
Because I know you work with a lot of big firms.
Yeah.
What do you think is one of the major things that really, I guess, gets in the way of the average person from spotting and taking advantage of investment opportunities here in Nigeria?
I mean, speaking from recent events and developments, so the primary concern I constrain, I'll say, to finding a quality investment to put your money into is basically knowledge. So there's a knowledge gap between knowing that this is an investment I should put my money into, and this is an investment I shouldn't put my money into.
Yeah.
And I'll start by saying that what works best for you is basically getting financial advice from a professional, right? So, I mean, not everybody can wake up and track the market. Not everybody can read a rating report, right? So, the best thing you do typically is to rely on the advice of professionals. But in a case where you don't have that, ask yourself, who is giving me this? Who is creating this opportunity for me to invest in? What is the reputation of this person? What is the track record, as it were, right? And what is the product or service? So I'm one for understanding the movement, what drives this particular investment I'm putting. So if I'm unable to identify the fundamentals of a product or an investment opportunity that someone is asking me to put my money into, I should be wary. Right. And then the other part is in Nigeria today, the Securities and Exchange Commission is the apex regulator of all investments opportunity, right? So is it a sanctioned investment? So these are, I'll say, tidbits, critical things you need to look at before putting your money in any investment. So if you're concerned at that particular point, I think it's better to take a pause and then seek investment advice. So I've seen people say, this person invested and they got their money back. No, it can possibly go bust the minute you put your own money in. So we have to be very careful in ensuring that we identify quality investment to put our limited resources into. Yeah.
Yeah, so yeah, I like that, but it seems, at least from my experience, being on the streets and all,
Yeah.
it seems like, because you said, okay, the SEC and things
Yeah.
like that. I don't think the regular person knows what the SEC is, right? And,
Absolutely.
and that's the first thing. It also seems that a lot of the really good investments are behind either, like you said, knowledge walls or access walls or access or gates, basically.
Mm-hmm.
And it seems like the investments that are available are usually the MMMs, the CBEXs, and those are the ones that you see and you can start right away. So would you say that there is an issue with access to these instruments, or even just the space
Mm.
where you can get these things in Nigeria, where some people have that access, while maybe the vast majority of Nigerians don't even have the opportunity to be in that space where they even hear about things like this, or meet with people that will tell them, oh, okay, investment has to be
Yeah.
SEC regulated.
Yeah. So look, whether you're an investment manager or you're an individual investor, the one thing both sides have in common is don't lose money. Now, if you're not going to lose money, I don't think it's too much work to do what I like to call due diligence, however preliminary. So, for instance, as simple as knowing who the person offering the, for instance, a lot of people you just talked about CPX, MMM, and all of those. Those are Ponzi schemes. You can't. What is the validity, the viability of the people who are offering this instrument? So, I think greed is a common denominator across board. So, somebody's offering you. Again, I'm trying not to be so technical here, but if somebody's offering you a rate that is significantly above what your risk free would be, then that's a problem already. So greed, I would say, is one of the major challenges. So not to say the information is not out there, but when greed takes over the ability of an investor to reason well, then I say the problem is is almost knocking. But for me, very importantly, is what is the product or service these people are offering? What can move this particular product, and who are they? So just how long have they been in existence? Are they regulator compliant? Just those little tidbits here and there, for me, I think is critical. You don't want to lose money. So yes, you should be able to do the work. But like I said, uh getting professional advice is ultimate. You cannot, I mean, there are a lot of people investing in treasury bills, commercial papers today. They don't have to know anything about it. Go to houses that are licensed to do things like, and you put your money there. But if the return is not, as huge as the Ponzi schemes of this world would offer you, that's where the problem is. But disclaimer, it can go bust at any time. So we just have to be very careful.
There's some things you said that I tried to listen from a layman's point of view.
Mm.
He said risk-free return. And I was like, yeah, I don't think the random person on the street listening that is risk-free return is going to know what that is.
Okay. So maybe in trying to break that down, right? There's what you call, there's a benchmark, right? Your monetary policy rates today in Nigeria about 27.25, thereabout. That means that is the minimum risk free what government is issuing for their, the CBN, from the CBN side of it. So we call it, that's the benchmark, right? Now, if anybody is offering you a return, or I would say an interest rate that that is far above that particular benchmark, then it means that the risk profile of that particular investment is very high. You then need to evaluate who is the person issuing it. A typical blue chip company will probably give you some 350, 400 basis point, about 3.5 or 5%, above what that risk free is. That shows you that, look, I'm offering you a premium. Yes, exactly. Premium to what the government would probably offer you for an investment like that. And even the banks today will probably offer you something within that range as well. So if anybody is offering you far above what a big commercial bank will offer you in terms of returns, a blue chip company will offer you in terms of return, then your risk antenna should start blipping in the moment to say, look, why is this person offering? And don't forget the typical saying, the higher the risk, the more the reward. So the only reason the person is offering you a humongous return on the investment is because he must have known that the risk profile of this particular product or service is is a lot. So we need to then be careful. That's when questions needs to be asked. You then need to ask questions to say, look, who is this person? What is their historical track record like? How much have they done in this market? And am I able to trust them to the extent that I don't lose money? If any of these questions raise a question mark, if there's a mark on any of these, then you have to then reevaluate and maybe talk to a professional to give you guidance. But again, more importantly, is this SEC approved? Like I mentioned, SEC is the apex regulator of all investments in the country, right? All these, whether public or even some private investments. So you need to be sure that these are SEC sanctioned investment opportunities, so you don't lose money. I think that's just the most important thing.
Okay, so let's dive into maybe some of these SEC sanctioned investment opportunities, like you just said. Can you just touch on what some of these opportunities look like? Whether they be specific instrument types or specific maybe situations where the lay person can say, okay, I think this is this, if you see this, then that's a sensible investment. Or if you see something like this, then, because I know that you said, okay, risk, right? And we've talked about it from risk, but actually want to like give names to some of these assets and opportunities. So that if the layperson sees that, then they know, okay, I've seen this and I've heard about this. Now I can have to start considering the risk of narrowing down in the first place.
Yeah. So maybe starting with from capital market investment. So there are approved capital market operators that are licensed by the SEC to issue some instruments in the market. So for instance, you have big corporates issuing what we call a corporate bond.
Okay.
Now, what comes with some of this investment is a ratings report.
I'm sorry, what's a corporate bond?
Yes. So a corporate bond basically means a corporate, an organization that has been in existence for a while, issuing a bond in the market. So they are corporate, they are registered with the CAC, they have their track record.
Okay,
so
company.
A company, exactly, issuing a bond. A bond is basically a type of debt instrument that is issued in the debt side of the capital market.
Okay, so the company is borrowing money from the public.
Essentially, exactly. So now, what comes with some of these bond issuances or this bond issue is that there are credit ratings attached to it. So you have credit agencies giving you a credit report to say, look, this company you are investing in, based on our evaluation of their cash flows, their operations, their historical records, and their previous performance in other borrowings they've done in the past, this is where we rate them. Now, you find that a lot of investments these days do not even, nobody is checking if these guys are well rated. So you have to be careful. So an A-rated company would attract a lesser return than a company that is maybe triple B minus or triple B rated. So these are some of the things we need to be conscious of, right? That's on the bond side. Nowadays, the federal government is issuing treasury bills. I'm aware that even some of our grandparents know very well that, look, talk to your investment house. They would buy treasury bills on your behalf. You have money market instruments now all over the place that people are investing their money into. And this gives you comfort to know that, look, you're not losing. Capital preservation is one of the prime objective of some of these things. And then you have commercial papers. I think there's a proliferation of commercial paper issuance in the market these days, issued by big companies, let me not say corporate, right? Coming to the market to issue. So again, you don't want to lose money. So we also want to be careful that we put on our risk cap when we are identifying possible investment to put our money into.
Okay.
Yeah.
So I've heard corporate bonds.
Yeah.
I've heard treasury bills.
Yeah.
Right. I want to buy a corporate bond. Let's see, me honestly, I want to buy a corporate bond right now. What's the exact next step?
Okay, good. Now, if we started this conversation by talking about what investment bankers do.
Yes.
Now, in creating that bridge, an investment house with an issuing house license has the mandate, of course, SEC approved, to basically package that bond instrument on behalf of a company that they've done proper appraisal on, that has the required credit rating. So again, SEC has a whole lot of rules for issuing a bond like this. So the investment house will package it and they will open it to the public.
Okay.
So you are basically talking to your financial advisor or your financial house, right? To say, look, what bonds are in the market? They'll tell you, so and so company is issuing today a so return. Then they would have, you apply. So they issue you with a commitment form and all of those. I mean, it's a whole lot of process I won't go into, and then you apply. But the most important, if you look at it, there's a breach. That bridge builder is the investment bank, your financial advisor. So they are very well positioned to guide you. So you're talking to them, they're telling you so and so company is issuing a bond, and then you are applying to invest in that bond. So they issue you with an investment confirmation notice. There's a whole lot of structure around this that allows you at the end of the day know that, look, so bond issuances are always semi-annual. So you get every 6 months, you get your returns. So you know that at the end of so and so months, I'm expecting so and so amounts in returns on my investment, in addition to your capital based on the arrangement. So anybody that can't give you that gap to say, look, this is guaranteed and you get to so and so point, then you should be concerned. Yeah. So these are regulated spaces that your returns are predetermined. You know what you're going to get at the end of so and so date. So I think that should give you some comfort. Yeah.
I knew when we were talking, something came to my mind when you said your financial advisor. Traditionally, that sounds like something rich people have.
No, so interestingly, I will say no. What I've come to see now is that, so I have a lot of aunties and oldies really that would come and tell you, I hear you are doing this. Please, which one should I do?
Oh, okay.
Yeah, and it's how it is these days. And what I basically just do is talk to an asset manager. I'm sure we have one here as well. Say, look, take over the portfolio. I mean, if you've worked 20, 30 years to gather some serious money, you don't want to lose it to a Ponzi scheme, right? So you need to, I think maybe that's just the message. Everybody needs to identify a qualified investment advisor to guide your investment decisions, because you do not want to lose money at any point in time. Yeah.
Sure. And anybody can. So asset managers, investment advisors, it's not just for, moneyed folks.
No. So that's, maybe we need to then demystify that myth, right? We need to demystify that myth. Look, like I mentioned, it's about information and knowledge. These things are, I mean, every street you turn to these days, there are good investment houses that have probably sprung up doing quality work. But like I said, they know these investors. They know who is issuing what at what time. They have the license to broker these deals for you. So just walk up to them. It's not big drama. As a matter of fact, there are applications on your mobile phones you can download these days, and you are able to, your mutual funds, your stock account, everything in one place. So it's not, we need to demystify that myth. It's not for the rich. Whether you're rich, whether you're poor, you don't want to lose money, right? So why not as well just take the leap of faith and discuss with professionals to guide your investment decisions?
Maybe it's the lingo, because when you hear things like yield, it's free, you're like, that sounds like, but yeah, I like that I said it's not just for the rich.
I think that's one of the importance of programs like this, right?
Yes.
Putting it out there to make people understand that, look, it's not as as big or as impossible as people make it seem, right? So it's just, and don't keep money in your bank, right? yeah, invest it, right? Don't just leave money idle. You have to invest it, and who better to talk to than investment advisors like Main Street Capital, for instance, who I know, of course, has the track record of getting value for people. Like, so these are one of the very important things we need to keep touching on. Yeah.
I mean, so one thing I know about Nigerians is, so we've talked about, a couple of regulated assets, right? Almost everybody I know that has sufficient amount of money wants to buy land. What is our obsession with land in Nigeria? Coming from a professional or even personal, point of view, as someone who has, I guess, curated investment opportunities for people or for companies. What's it with land?
Well, it's a very tricky one. I'm always very careful talking real estate.
Yes.
But, when you're talking about store of value, right, your land is probably one of the the big, I mean, you see those real estate guys telling you buy this land. There's nothing wrong with land,
Yeah.
but I'm of the opinion that cash is king. So keeping your investment and assets near liquid is very important. And this is what I mean. If you have a land anywhere now, you can't sell it in a week easily.
Yeah.
As a matter of fact, when we are doing evaluation of an individual's evaluation generally of a company or of their assets, we usually add what I call illiquidity discount to our valuation. Look, what's the possibility that so you have a land that is valued at maybe 500 million or something like we have in Lekki and Co. How quickly can you sell it? Right. So that for me, that's one of the drawbacks with real estate investment. But if you're buying a land to build it, to then start renting it out and then getting rental income, perfect. That is, that this is periodic. So it's almost, as a matter of fact, investment houses have what you call real estate investment funds,
Yeah.
where you're able to invest in real estate backed assets. Nothing wrong with real estate, but again, it's good to have near cash investments that allows you,
So
turn around your.
Yeah, is that something that smarter people or smarter investors do? Where if they are buying land, they are buying it for the purpose of doing something with it that brings cash flow. If not, they just prefer to stay in opportunities that are more liquid.
Mm.
Is that something like that?
Yeah, it's a portfolio thing, right?
Okay.
So you hear again, talk to your investment advisors, right?
Yes,
So
not financial advice.
so it's a portfolio thing, right? So you have people building their portfolio, different asset classes within their portfolio. You have those who are investing in mutual funds, equity, real estate, and all of those. So if you've grown your investment portfolio to a point where you have enough headroom to go deep into real estate, but then you still have enough headroom to accommodate near cash investment, then it's fine. There's absolutely nothing wrong with real estate. Don't forget that a land you bought for maybe 20,000 naira 20 years ago is probably 20, 30 million now, right?
Yeah.
So that's one good way to store value, right? But again, like I mentioned, cash is king. So you want to be as liquid as possible in the near term.
Now, this is a little bit of a curveball, but I have
Yeah.
to ask this. What about buying land to hold for a long term, since it's a store of value, and then taking out loans against your land to invest in near liquid assets?
So this is structuring. You didn't tell me you're structuring investment yourself. No, so it works, and it's one of the things the so-called rich people do, right? So a commercial bank today giving you money, or even maybe anybody lending you money these days, they want it to be backed by collateral. So if it's not cash, they're looking for landed property. And when you're doing your valuation of your land, for instance, you hear things like your market value and your for sale value and all of those. So based on the valuation of your assets, you can then approach a lending institution to get money. Right? Yeah, it's something you can do. So you borrow money against it. Don't forget, the land is not doing anything really. You're just basically keeping it to store value and then grow in investment value over time. So yes, it's something people do, but again, we just have to be careful such that when we are taking investments like this, we don't lose money. So some people, I've heard people buy land in one bush somewhere in, I won't mention any place, and then maybe years down the line, you go back there, you're looking for your land, so we just have to also be careful. I believe that space should actually be regulated as well, because you're in a lot of scam in the real estate sector now. So yes, so long as it's regulated and everything is fine, then you can as well delve into that.
Okay. So now mindset shift, right? Because I'm thinking, okay, people are coming into, at least watching the episode with the mindset of, okay, how do I get new opportunities or spot new opportunities, right? So one thing I've learned in finance and in life generally is, if you want to start doing new things, you have to first stop doing old things, right? So how can people reframe their mindsets, right? So I want people to be able to think like an investment banker. Maybe not exactly like, because you have to go to school for that, but how to use some of the frameworks that you use, right? So a company comes to you and says, sir, we want to raise funds, right? You think, I'm sure a lot of people that run companies think that their companies are great investment opportunities, right? So they come, we're investment opportunity. We can give you 70% return year on year. Da, 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 da.
That's a red flag, by the way.
Okay, so you're looking at them, they come to you, come help us raise funds, and you're probably now looking from the buy side, right? From the aspect of the investor.
Yeah.
What are the first few things, or what are the couple things you are going to look at and tell this company CEO?
So, due diligence, very important. You cannot emphasize the importance of carrying out basic due diligence.
One thing.
Yeah.
Can you break it down?
Yeah.
Because one thing I've realized talking with a lot of people that have research backgrounds is they know how to give you the technical, right? So can you break it down using very simple words?
Absolutely. So one of the criteria, even if you go to this SEC's website, is look, you need to have historical record of operations.
Okay.
So if I come to you today, looks, I have this opportunity, this company is raising. You need to then tell me how long. First question: how long have they been at this? Right. So you're maybe 3 years, 5 years. They've shown consistent track record in doing this. Then pick up their financials. Maybe not many people have the opportunity to do that kind of report. Have they done something? Have they issued or have they gone to raise monies like this in the past? What is the market saying about them? As simple as putting their name into Google will probably tell you a lot about the company you are putting your money into. So track record, historical record in terms of whether they've taken loans or they've taken people's money like this and they've not returned it as they should. Yeah. The other part you also need to look at, who are the faces behind this investment? Who are the promoters? So these days you see a lot of companies that I like to call, a company has a life of its own, right? It's an entity on its own, but who are the faces behind it? So for instance, you probably want to then, who is the MD? Who is on the board? What have these guys done? As simple as these things are, they probably tell you a whole lot. And then you then want to look at the product they are offering you or the service they are. So maybe they want to start raise money to be able to do more of what they are doing. So what is the product? What is the service? Because these products, do they have fundamentals? Again, I'm trying to break that down to say, are there events that move this particular product or services up and down? Okay. If a product and service does not have fundamentals, I'm just telling you, just give money, I want to invest it. Okay, what are you investing it into? So you then need to, are you investing it in real estate, for instance? Okay, I know that, I can always see the houses they are building. Are you investing it in, whatever, what are the products? So if you are unable to pin down the fundamentals that can move the particular product, then you should be worried and say, look, these guys are probably going to joke with my money. And then another part, which I would never stop saying is this investment approved by the appropriate regulator? Because you have recourse to say, look, this thing, and no regulator will approve something that has not passed their process, right? Their due process. So you also want to be sure that this investment has passed the necessary approvals and the product is there. The fundamentals driving them is over. And then the promoters, that, okay. So CBEX these days, I heard they were looking for the promoters. It was a lot of work trying to. So, if I have a good product, I want to put my face out there and say, look, I'm the face behind this particular investment. You mention any big company in Nigeria today, one person that is their chairman fronting them and all of that. So for me, these are very, very little but important details. And then Google is our friend. Type the name of the product, then you'll be able to see things for yourself. And then, okay, I should do this, I shouldn't do this. But very important, always seek professional advice. If you can't do it yourself, seek professional advice, and I'm sure they'll guide you appropriately.
Firms that don't have historicals, like new companies or startups. Yeah.
So again, there's a whole different ecosystem for startups, as you're aware. So there are people that the resources they have is dedicated to investing in startups. So that's a whole different conversation entirely. But even the person that is promoting that startup probably has some 6, 7, 10 years experience doing that thing for someone else and probably then wants to go into it on his own. And you most often don't get those people coming out to issue or to raise money in the public.
Okay.
So it's either they're raising from their family and friends, or they're raising money from HNIs, high net worth individuals, or what I broadly like to call qualified investors. So you would not find many startups really issuing money in the public space. They're always doing it amongst family and friends and targeted investment ecosystem. So that should tell you that look, the risk criteria is very high, but those investors they're also conscious. They know how to evaluate to say, look, this money is allocated to this. If this happens, this merited doesn't. So they understand the upside and the downside. But as somebody willing not to lose money, uh, you have to be careful. I think I should mention that even startups these days typically have sponsors. So the way it works is you have the borrower, you have co-obligors, and then you have a sponsor.
What's a co-obligor?
A co-obligor is a related party. So for instance, if you have a company that is doing maybe 10 billion in revenues, and then you have another small company that's a startup, a good investment bank will link the both of you. So we'll not just be showing the startup, we're showing you as co-obligor, meaning that if the small company fails in its obligations, you, the co-obligor, will be there to take up the repayment obligation, or the sponsor as well. So you have your due diligence. Again, it's structuring, right? Ensuring that people don't lose money is the work of investment advisors. So yeah, looking at those little tiny little details are very, very important.
Okay. All right. So mindset shift, right?
Mhm.
Because that's the whole point.
Yeah.
Right. Introducing a new kind of thinking.
Yeah.
So can you just summarize, let's say 3 points?
Okay.
Right. I'm a layman. I'm not really sure what to do, how to qualify, investments. But what mindset do I have to have moving forward? If so that even if I'm not even, investing in anything, just a better way to think about investments.
For me, one of the most important ones is don't be greedy. Right. If it's too good to be true, then it's
Yes.
probably too good to be true. So you need to be sure that look, this returns this person is promising me. So imagine I hear people tell you they can give you 50% in 3 months. And then you get to then sit back and think like, okay, so that's greed. I think it's greed. I mean, don't get me wrong. Some people have probably done it and have gotten away with it, but don't be surprised. It's when you go into it that everything go bust. So if it's too good to be true, it's probably too good to be true. So don't be greedy. That's number one. Number two is investing is not a difficult thing if you're speaking to the right people. How do you identify the right people? Go to the professionals. Main Street Capital is doing a lot in this space. So talk to somebody from Main Street Capital, for instance. I'm sure they'll point you in the right direction. And I think the final point is look, cash is king.
Yeah.
You want to be as liquid as possible, such that you can take advantage of the market. So you don't want to tire. Some people will tell you, if you invest in this, you can't get anything back from it until so and so time. So you have to, except you have enough buffers to do that, you have to also ensure that you are as liquid as possible. So ensure within your portfolio there are asset classes that allows you draw cash, because invest opportunities open up every time. Federal government is issuing treasury bills, periodically. You have important companies also coming to issue bonds, commercial papers all the time. So if you're liquid enough, you can tap into those opportunities, especially as the market is moving. Right. So those are just my three
Yeah, actually, I love
points.
that. I love that because it's one, don't be greedy.
Very
That works
important.
on yourself.
Yes.
If you can control your greed, then I think that even links to your risk appetite.
Absolutely.
Right? Because if you're not
Absolutely.
greedy, there's some risks you see, you'll be like, okay, I think
Exactly.
that's not for me.
Exactly.
The second one, which is talk to the right people, which was something I think we even touched on of access of information. You have to talk to the right people. Now I know that online, the online space could be a bit, should I say, vicious, because if you're not sure, you could literally listen to the wrong things.
Absolutely.
I think I once saw this TikToker talk about how you can register. Now this wasn't in Nigeria, it was in the US, but he said you can register a company, get a business business credit cards, max them out, and then file for bankruptcy, and then you have money. And I'm like, That
Don't
doesn't
don't don't,
sound
don't
right.
listen to exactly. It doesn't sound right.
Yeah,
Exactly. So I mean, if it sound, I mean, the people regulating that space would definitely have put in um, some measures to ensure
yeah,
that you don't go. That's probably fraud. So
yeah.
one has to be
It
very
is.
careful.
So
Yeah,
you have to be
these
careful
things
with,
it's very important. Very
ensure
important.
you talk to the right people.
Yeah,
And thirdly, and I think this is, stay as close to cash as
very
possible.
important. Very
Your
very
investment should be
important.
very
Yeah,
liquid,
yeah.
at least for when you're starting out.
Mm-hmm.
If you
Mm-hmm.
know you don't have a lot of knowledge in the space and you don't have buffers, like you said, stay as close to cash as possible.
Yeah,
I think with this theory, that's people can actually really
very
just put that in
important.
mind and start. All right. So any other thing you feel people should know?
Yeah, I think it's basically demystifying the myth to say, look, it's only the rich people
Yeah.
that can get access to these investment opportunities, or that the rich will keep getting richer and all of those. So you can start small. So imagine you put again, given what the interest rate environment is today, if you put maybe some money in a mutual fund today,
Yeah.
I can assure you that on a daily basis, you can track the returns you're getting on it. And again, given the new, again, I'm trying not to sound so technical, but given the new um, orthodox policy that the central bank is pursuing today, you find out that the gap between your real rate of returns these days beginning to converge at some point, right? So mutual fund investment is probably the most secure type of investment you can put in, because they invest in risk-free assets most. Now, depending on your risk appetite, they won't start going up into some equity investment. And even those equity, they are investing it in listed corporates with good fundamentals. Like I mentioned, you can track it to say, look, it's so and so news, or this company moves up, it moves down. So again, it's not a difficult thing if you're speaking to the right people. So everybody should try their hands on one kind of investment or the other, and I'm sure we'll be happy for it. Again, let's not lose money.
That's the first rule. Don't lose
Let's not
money.
lose money. Yeah.
Thank you so much, Olalika,
Appreciate it.
for
Thank you so
coming in
much.
and sharing with us your knowledge. And here you have it on the market lens. If you want to look at good investment opportunities, the first thing is don't be greedy, right? If it's too good to be true, it most likely is. Second is get good information. Talk to people who know what they are doing. Talk to firms and asset managers who know what they are doing. And the third, especially if you are new to this, be as liquid as possible. And also do not think, access to opportunities is only for the rich or the connected. Anyone, can access, investment opportunities. And that's why we're here on the market lens to talk about investment opportunities and how you access them. Don't forget to follow us on social media, reach out to us, talk to us. We want to hear what you think. And as always, stay safe in the markets.